Hi and welcome to my brand new channel called The Good, The Bad and The Bitcoin, where I talk about trading and investing, which is something I've done for 25 years. My name is Dirk and yes, I'm a real person and really have done what I claim here for such a long time. Feel free to check me out on other social media like, for example, LinkedIn. By the way, if you watched this video until now, congratulations, your attention span is already higher than that of the average human being and of a goldfish. Keep watching to find out more about this and why this actually is important for trading and investing. If you want to learn what the differences between professional and amateur traders are, and if you are really serious in your plan to become more professional with your trading and investment decisions, leave me a like and subscribe to this channel. I will be releasing a new video every week to support you on your journey to making financial decisions with more confidence and on a more professional level. In today's video, I want to share in my opinion, 3 biggest mistakes that beginner traders and investors make and show you how you can avoid them. These mistakes are choosing the wrong time frames, setting the wrong expectations, and poor risk management. Most traders that start trading for the very first time start trading on the so-called lower time frames. Lower time frames means, for example, 15-minute, 5-minute, or even the 1-minute charts. They apply a bunch of indicators to their charts and off they go, expecting to earn a fortune within the next few days or weeks. The allure of making supposedly quicker profits within a shorter period of time is very tempting because it feeds into the same areas of our brain that also social media does. Quick action, quick reward, quick satisfaction. Have you ever noticed why, for example, most TikTok videos are only 20 or 30 seconds long? Because sadly, the attention span of humans is not much longer than that. In fact, it's even lower than that. According to some research, the average attention span of human beings has decreased from 12 seconds in the year 2000 to only 8 seconds in 2015. Fun fact, goldfish are able to concentrate for 9 seconds on a task. So what does that say about humanity? So with new candles forming, for example, every minute or even below that on charts, the probability of a new trade setup forming faster is of course higher. More trade setups mean more clickety-click action, leading to more adrenaline and dopamine being released by your brain into your bloodstream. A vicious and very tempting combination, as most trading apps aimed at beginner traders nowadays are also designed in a way that they make trading feel more like a game and not like a business. In fact, the term for this type of design marketers use is gamification. Now this would not be so much of a problem if trading on these lower time frames was not already the most competitive field of trading. Because here you will directly compete with the sharks and the goldfish class. The hedge funds, the big investment banks, greetings to JP Morgan and Goldman Sachs, or investment managers such as BlackRock. Basically all companies that not only have hundreds of millions of US dollars of budget every year to attract the smartest people on the planet when it comes to finance, but also heavily invest into algorithms and AI that can analyze millions of data points per second and execute 100,000 trades in the time it takes us to make a click with our mouse. More than 70% of the daily trading volume on the New York Stock Exchange is done by algorithms, and part of the logic of these algorithms is to exploit the mistakes of other algorithms or of humans. So in case you do not run a multi-million US dollar hedge fund that heavily invests into technology to get order speeds down to the nanoseconds, you have a problem. So what is the solution to this problem? The solution is rather simple, but you might not like it. Do not trade the lower chart time frames. Do not be the goldfish in the shark tank. Instead, base your trading decisions on, for example, daily charts. I know, less clickety-click action, but also much higher chances of succeeding. Plus, also a much more relaxed trading experience. If you read on social media about trading, it will not take you long to find stories about people who supposedly made millions of dollars in weeks or months by just using a simple trading strategy, a magic indicator that is never wrong, or my favorite, a trading robot that completely automates trading, basically earning them a fortune on autopilot. And hey, today's your lucky day, because you can now purchase this simple trading strategy, this magic indicator, or this super awesome trading robot for just $50 per month, or by joining this even more super awesome trading group on Telegram. So this is your chance, and what are you waiting for? I'm sorry that I have to be the one sharing the bad news, but in my 25 years of trading the markets and meeting thousands of professional and beginner traders, I've never, not even once, met somebody who made a fortune with one of the three above. All the pro traders I know share common traits: an absolute passion for learning, a passion for finding out what drives the market, and a willingness to act upon the findings. Trading and investing is a bit like learning a new language, maybe like the most difficult language in human history. The beginnings are slow and it takes a lot of time to learn and understand the vocabulary and grammar, plus even more time until you finally start understanding what the natives are saying or even have conversations with them. But if you stay dedicated and disciplined, you will eventually reach this level of fluency. Trading fluency translates into finding your own trading strategy and your own way of understanding the markets. And this might be a time-consuming goal to achieve, but boy, it's also a very rewarding achievement. So set yourself realistic goals and do not have the expectation to understand and know everything already after a week, a month, or even a year. Spend time educating yourself with good resources, learn the vocabulary of the market, and spend time developing and especially backtesting your own trading strategy. In terms of earning money, your first realistic goal should be to not lose money for a time period of, for example, 3 to 6 months. You probably know why casinos earn money, right? Correct. It's because they have a little edge over you. For example, with a green zero when playing roulette, which gives strategies such as betting on black or red a success rate of slightly under 50%. Over thousands of gamblers, this slight statistical difference will lead to the casino earning money. One of the first questions I usually get asked as a trader is, how many percent of your trades are successful? My answer is usually not very light, because first of all, it depends on the time frame. For my long-term trades, my success rate usually is much higher than for my short-term trades. But let's go with my more short-term trades, the so-called swing trades that I usually hold onto for anything between 2 days to 2 weeks. During the last year, my success rate here was 57.31%. I usually get shocked faces upon saying that, and reactions such as, "I thought you are a professional, how do you even earn money with this?" My answer is usually to ask why the person thinks that my success rate says anything about actually earning money with trading. Let me explain this a bit using math. I know, oh my god, math, please do not bore me to death, Dirk. But you will see that this concept of risk and reward is actually very simple. If you risk $1 to earn $1, you would need to be correct with 50% of your trades to not lose money. Easy, right? However, what new traders usually do is that they risk $2 or $5 or maybe even $10 to earn $1, because new traders tend to take profits very quickly and let losing trades run too much further into loss. Let's look at these examples. If you risk $2 to win $1, you need to be correct with 67% of your trades to break even. If you risk $5 to earn $1, you need to be correct with 83% of your trades to break even. If you risk $10 to earn $1, you need to be correct with 91% of your trades to break even. Experienced, successful traders usually are between 47 and 61% in their success rate. So even with risking $200 to earn $100 on every trade, you most likely will already be on the losing side long term. The secret to success here is to turn things around and look for the trades where you can actually earn $200 but just have to risk 100 US dollars. Long term, this translates that you only need to be correct with 33% of your trades to break even. Sounds much more realistic and doable, right? The challenge here is, of course, that this type of discipline to really wait for trading setups like this goes fully against the fact that our brain is an adrenaline and dopamine junkie. Remember what I told you in the beginning of the video about why so many traders choose to trade the low time frames? If you watched until here, I want to thank you and congratulate you, because I think you have shown that you really are serious about taking your finances into your own hands and are not looking for easy solutions that ultimately will just end up costing you a lot of money but earning you none. If you are interested in learning more about how to approach trading and investing on a more professional level, leave me a like, subscribe to the channel, and especially leave me a comment on what your worst or best experience with trading has been. Until we see each other again, happy investing.